Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Dear viewers, in today's video, I'm going to speak about 3 microcaps that have shown high improvement in profitability over last 5 to 6 years. A few days ago, we saw the stock prices of Zomato crashing. All the fancy narrative about new age business models, market leadership, and so on could not save this loss making entity when the investors hurried to exit with the expiry of lock in period. With the moderation in market sentiments, the value of profitability in businesses is back. When everything else suffers on the macro front, growth in profits along with positive operating cash flows are comforting. Now, please do not mistake high profitability with high profits. We are talking about operational profitability here, that is, how much operating profits a company makes per unit of sales, that is, operating profit margins. Now, like I said, I have chosen 3 microcaps that have witnessed growth in profitability. Here are some of the factors that I have kept in mind while making this selection. First, an improvement in operating profit margins over last 4 to 5 years. Second, comfortable leverage or debt to equity ratio. Third, healthy return ratios. And fourth, positive operating cash flows or cash flow from operations to net income, which is positive. Now, before I move to reveal these names, here is a disclaimer. While these are interesting names to include in your watch list, the inclusion in this video does not reflect buy, sell, or hold view. So, moving on to these names, the first is Word Wizard Innovations and Mobility Limited. This is the only listed company with core business of electric vehicles with a capacity of 4 lakhs to 6 lakh bikes per year. Its manufacturing facilities are automated and spread over 70,000 square feet. It offers more than 11 two-wheeler EV models under the name Joy e-bikes. The distribution channel comprises over 550 dealers across the country and it owns over 10 exclusive retail outlets. The company launched its first e-bike in 2008-2019 and it turned profitable in FY21. In 2021-22, it has acquired 4 million square feet of land for development of EV ancillary cluster projects in Baroda. Its future growth plans include launch of new electric vehicle models for two-wheelers, foray into 3 electric wheeler space and into export markets of Middle East, Europe and African countries and increase the domestic network as well. In FY22, the return on equity and capital employed stood at 19 and 27% respectively. The company has zero debt on the balance sheet. The cash flow from operations to net profit is above 1. The PE seems high at 161 times. However, the earnings have grown at a higher rate of above 300% and PEG ratio of the company stands at 0.6 times. The second on this list is Vinta Labs. The company is in the business of testing and contract research for foods, drugs, environmental testing, clinical research, biopharmaceutical testing, and preclinical studies. 60% of its revenue are from pharma contract research and testing services. It operates through a lab of 20 labs. It has 2 good US FDA remote record views with no observations and it has signed a public private partnership with FSSAI or Food Safety and Standards Authority of India to set up, operate, and transfer National Food Laboratory at JNPT port for testing samples of food imports. The company will operate and maintain this facility for 25 years with an extension clause. The operations for this PPP commenced in the quarter ended March 22. Plus, there is an optionality angle. The company has established a wholly owned subsidiary to test electric and electronics components. These operations have already commenced. Its future growth plans also include adding new labs. The management is targeting nearly doubling its revenues by FY25. Its operating profit margin is up from 18% in FY17 to 29% in FY22. The ROE and ROC stand at 20% and 24.4. Cash flow from net profit is greater than 1 and debt to equity is less than 0.1. It is trading at a PE of 18.6 times and a PEG of 0.6 times. The third and last on today's list is Ador Fontech. The company's products and services are tailored for customers' equipment and machine maintenance with the aim of enhancing life and reducing downtime and industry cost. The end user industries include industrials and capital goods, that is, mining, steel, turbines, cement, and so on. The operating profit margin has increased from 10% in FY17 to 16% in FY22. Through its subsidiary 3D Future Technologies, the company is also exploring opportunities in 3D printing in dental health industry. The company is almost debt-free with ROCE at 27% and return on equity at 19%. The cash flow from operations to net profit stands at zero point 0.7 times. The stock is trading at a PE of 10 times and a PEG of 0.44 times. Here is a reminder again to not treat these microcaps as recommendations but as some names to keep on your watch list. With this, I have come to the end of the video. If you found this information interesting, do press the like button and let me know through your comments. Subscribe to Equitymaster YouTube channel for more such interesting information. Thank you for watching. Goodbye.